We had the JSE coming all the way back today after trading weaker for most of the session, and that was as the US manufacturing sector showed the first signs of growth in a year and a half. Over in Europe, shares were also weaker for most of the day as investors booked profits after recent strong gains. Well, tonight's market watcher is Nick Kunze. He's from BJM Private Client Services. Nick, good evening.
Good evening.
A bit of a volatile session on the JSE today. We opened higher, traded weaker, bits of strength just before the closing bell, but then closing weaker again.
Yeah, very seesaw day, up and down. We opened in line with the Far East, in line with a stronger sort of close in the US. Was off its lows, opened up 200 points. By midday, we were down almost 200 points off the back of some rather disappointing UK manufacturing numbers, showing that they're still in contraction. They were expecting it above 50, and of course it came in a lot beneath that 50 level at 49 and some change. So that set the tone, and then going into the US, rallied all the way back up again. Strong US data, as expected. It has been the theme of recent weeks. Much better than estimates. Construction spending was slightly worse, but existing home sales better. The ISM numbers better. And as you pointed out, I think coming into the studio, the market's down again. So volatility is certainly being the theme of the day.
Wouldn't you have expected that ISM number to sustain an improvement on the market as it opened in the US? Yeah,
I think I would, but what's been happening recently is these markets have been pretty priced to perfection. The market's expecting the good news. You saw the S&Ps recap sort of 14 odd points of losses just before the number coming in the last sort of half an hour. So the market's certainly pricing in these better than expected numbers, and you almost get the feeling that the market's got a little bit of fatigue up here, and more than likely leaning towards, if there is a disappointing number, they certainly expect these markets to react a little bit negatively to it.
Well, if we are pricing in better than expected numbers, what's it going to take then for the market to move higher from these levels?
Well, exactly. Traditionally, September's a bit of a nothing month. The earnings season is over. The guys are the dividend strippers. The dividends have already been paid in August. Where to from here? Traditionally, it's always the October, which is supposedly the crash month. But September, on average, I think last 2-3 years, September's been about a down 5 to 6% month on the US market. So it's just running out of steam, I think, Stephen. It feels like it's going to take something really special to push that all share well above that 25,000 level.
Well, as we were talking about just before you came on during our technical analysis slot, we seem to be in a sideways moving pattern at the moment. How long do you think we could stay in that sideways pattern?
We could stay here for a while until we have some impetus to break out either to the up or to the downside. The problem being there's still a lot of money sitting on the sideline. It's now heading well into the second half of the year. A lot of fund managers have had to allocate cash into the markets. They've missed this whole bounce. It's probably what's supporting the market from going any lower is the flow of cash. And we saw on the JSE last week, foreigners were net buyers again on the JSE. I imagine we could drift sideways for a couple of weeks until we have some sort of breakout onto the up or to the downside.
How long can that money sit on the sidelines, though? When is it going to come back into this market?
That's the million-dollar question. When you've got close to $1 trillion sitting on the side, earning pretty much zero interest offshore, trying to find a home and watching the S&Ps, have a 50-odd% rally, and I think this is the 6th or 7th month of certainly of positive closes. It's going to have to either chase that money, or they're going to have to answer some very strong questions from their board.
Of course, you said that the US earnings season is now over. Of course, we're still right in the thick of South Africa's earnings season. And some of the earnings pretty good to date. And we had a trading update out from Aspen today. It expects its earnings to be up 60 to 70%. So there are still some counters out there. And of course, we do know that Aspen is a defensive stock. But there are still some shares out there that are going to perform quite strongly.
Absolutely. I think Aspen, one of those stocks that is actually on an all-time high. I think there's about 7 or 8 counters on the local bourse which are hitting all-time highs, not 52-week highs, but all-time highs, and Aspen being one of them. Still some good earnings filtering through. There's still obviously quite a good growth success story on the continent. We saw the likes of African Rainbow yesterday. Also, the stock's still sitting also at pretty much highs the last few months. So onshore, bit of a mixed bag. Some of the resources coming off their lows, looking a lot better. Some of we saw ShopRites recently as some of the retailers coming out slightly worse, margins being suppressed a bit. But again, adding to that theme of now the news is out, where we're going to go to from here.
Would you be out there stock picking at the moment and looking for some of those gems that are still going to perform quite strongly?
I think it is definitely a stock picker's market, and alluding to what you said about defensive qualities, I think you would be looking at the defensive play right now. You would be looking at the Aspens, the SA breweries, possibly the British American tobaccos, because we might be heading into the market leaning itself up for a little bit of disappointment, and we've seen a lot of flows going into defensive quality stocks at the moment.